Is the British pound GBPUSD setting up for one of the best trades of the year with last week's close? I'll have all the details in today's video. We'll talk key levels, targets, what to watch for this week, and also the latest on the DXY. All right, now before we get to that, if you do want my help with your trading and also to be able to see my trades in real time, click on the link at the top of this video. You're going to be taken to this page here where for a limited time, if you deposit $100 or more with my preferred broker, okay, you're going to get first of all, a 30% trade credit or bonus. You're also going to get lifetime access to our VIP group. All right, so head over here, click on Get Started down here, fill out the application, deposit $100 or more. You're going to get that bonus and also VIP access. All right, so as an example, if you deposit $1,000, you're going to get a $300 bonus. Obviously, the more you deposit, the bigger the bonus. All right, so see the link in the description, or if you're on the website, click on that broker link at the top of the page, and you will be taken to this page. And again, that includes my help with your trading, daily videos, see my trades in real time, etc. All right, and we do host everything in Discord in case you guys are wondering. All right, so let's go ahead and take a look here at the GBPUSD daily time frame. So this is the pattern that we've talked about now for the last few weeks. And this is a parallel channel, first of all, that runs lower here with lower highs and lower lows. Okay, so you can see that we have the two lows back here. All right, so we have this high up here, all of these highs along resistance right here, including around 1.27 recently. And then we saw the rally in March. Okay, now as of this video, this right here is nothing but a liquidity sweep. So what happened here for the pound recently? Let's go ahead and talk through this because this is really important, not just for this pair or this trade, but for market dynamics in general. So you can see all of these highs right back here. All right, so let's take a look at these highs back here starting in late December all the way here through January. Okay, so everyone was getting short through here on all these highs. So what that meant is that stop losses, okay, liquidity was building up above this area, and markets seek liquidity. Part of that is because the big players in the market, they need that liquidity in order to fill their positions. So they use stop orders like this up here, okay, to fill large positions like what we saw here in March. Okay, so markets seek liquidity. The market knew there was a lot of liquidity up here, and we saw that swept earlier this month. Okay, now the reason that we know that is because there are two fake outs on this chart. And I want to talk through this because a lot of people in the comments will tell me that everything I talked about here is not a fake out. Okay, the fake outs that I label a fake out are not actually fake outs. Well, here's the thing, guys. This up here, okay, was clearly a fake out. This move right here, this liquidity sweep of that high, that was a fake out. And we know that because this was our key level, okay, that December high. We got the close above, we got the close below on the very next candle, and notice what was tested as resistance. This is textbook fake out. Now, what we can conclude with last week's close is that this too, up here, this entire move is also a fake out. Now, whether you want to call it a prolonged fake out or just a fake out is up to you. But the bottom line is that it was a fake out because a fake out is nothing more than a failed breakout. And this was a failed breakout. There's no other way to classify it just because if you look here, if this was not a failed breakout, then we would have seen the pound come down here and retest this area last week. Okay, so rally up here, take out the high, come down here, test support, and then we would have seen this week, okay, to end last week. Instead, we got the market closing back inside of this channel. Okay, so this right here, this close makes this up here a failed breakout, aka a fake out. Okay, so I wanted to talk through that because again, I know a lot of people say that, well, this up here is not technically a fake out, and it is, in my book, it is a prolonged fake out because it took a few weeks, but it is a fake out nonetheless. And really what this comes down to in terms of market dynamics, you can call it whatever you want. The point is that the market came up here, took out liquidity, and closed back within this channel. Now, a lot of times when you get a confirmed fake out or reclaim like this, whatever you want to call it, you do get an extended move in the opposite direction. Okay, so when you get a move like this that fails, okay, from a pattern that is this significant, a lot of times that will produce an extended move in the opposite direction. And that's exactly what I'm looking for here from GBP. Okay, now I've also positioned myself for that. So full disclosure, I do have two short positions on here. I added to it this week, but I do have a short position that I mentioned in VIP up here around 1.28. Okay, so I positioned myself short through here, and I also added to it through here yesterday. All right, So I've got pretty wide stops on both of these. It's technically a risk-free trade since I already entered up here around 1.28. Again, I shared these in the VIP group in real time. And I will put a link at the top too if you do want to just pay to get in the group. I'll put a link at the top of this video for 70% off lifetime access to VIP. All right, so I am short here. I'm looking for a move down here toward, first stop is going to be 1.25, pretty obvious area for the pound back here based on all of these lows. So we've got support down here. However, that's going to be a preliminary target for me because I think that as a final target, this is a bit too conservative considering the fake out that we just saw above this channel. Okay, so in terms of final targets, I'm looking at much lower levels like down here toward 1.21. And the reason for that is if we move out here, what you'll notice is that we have obviously the swing low from back here, but there's also open imbalances back here. So if you'll notice on this daily candle right here off of the 1.22 support. Okay, so this candle right back here, what's interesting about this is that if I move in to show you this candle, show you this wick, this was never filled in. Okay, this lower wick right down here around 1.22. So this candle, notice this lower wick down here, the very next day essentially opened and then went straight up. There was no retrace down here into this area. Now you can see the same thing from here with this candle. Okay, the very next day we saw a very shallow retracement on the very next day. So there are imbalances around 1.21 and 1.22 for the pound. Now, the thing about this though, for the pound to get down here, this is going to be a level by level market as they all are. So what I mean by that is that the pound has to get below 1.25 first. Okay, so this is going to be a preliminary target. All right, so kind of a first stop here for the pound if we do get that rotation lower. All right, so down here around 1.25. If we see a sustained break below this, then you're talking about this pivot right here around 1.2375. Okay, so this would be the next stop. A sustained break below that, you're looking at 1.22. Obviously, sustained break below that, you see 1.21. You get the idea, right? Now, this is all going to be in play as long as the pound is below this area between 1.264 and 1.27 on a daily and weekly closing basis. Okay, if we were to see the pound close up here in this area, then it would negate the entire bearish bias that I'm talking about today. All right, but I'm staying short here, looking for lower from the pound. But again, it is going to be a level by level market. Okay, now let's take a look here at the DXY, the US dollar index. And if you guys are enjoying this content, be sure to subscribe to the channel and click the bell icon for notifications. Don't forget to smash the like button to show your support. Okay, so looking at the DXY, we do have a breakout that occurred last week. Okay, so based on this trend line up here, which could also be the top of an equidistant channel, you can see where the DXY did break above this level last week. Okay, now I showed this to VIP members yesterday before we got the retest, and what's telling me that this is accurate is today's move. Okay, I haven't changed the location of this level, and you can see where last Wednesday, that FOMC candle touched right off the top. Notice where today's low comes in. Now we're seeing a pretty bullish move here from that low, but as I've said recently, the DXY needs to reclaim 104.45. It needs to reclaim this on a daily closing basis to expose levels like 105 and 106. All right, so I'm pretty bullish here on the DXY, cautiously bullish still because it is below 104.45, but we do have a preliminary breakout, an initial breakout from this level off of that November high. And furthermore, we also have the market above that 103.6 to 103.8 area. Okay, so over the weekend, if you'll remember, what I mentioned was that 104 was going to be support for the DXY. And if you'll notice, today's low is 104.01. All right, so right into the 104 support level I mentioned on Saturday. So again, cautiously bullish right now for the dollar while it's above this area down here. We could still see a sweep of the low though. Keep in mind, one thing I want to point out today is that this week we do have the last trading day of the month and quarter coming up. Plus we have a holiday weekend, bank holiday on Friday. So expect some erratic price action as institutions close up their books, plus illiquid conditions. Okay, so that's going to be important if you are going to trade the pound. And this is not financial advice, but if you are trading this market, okay, especially this week with the last trading day of the month and quarter coming up, illiquid conditions, etc. In my opinion, you don't want to be trying to short this with a really tight stop because there is a chance, especially with US GDP coming up, that we could see a sweep of even this high today. Okay, so if you're shorting this, again, not financial advice, just my opinion, but if you're going to short this or look for any trade here or any other market, in my opinion, you probably want to have a nice wide stop just in case we do see some erratic price action this week. All right, but all in all, it's looking pretty bearish here for the pound, closing back within this channel. And as for the DXY, it's holding above 104. As long as that's the case on the higher time frames, I'm going to be bullish on the dollar and bearish on markets like the pound and even the euro. And also gold, guys. Don't forget about gold. I mentioned it over the weekend as well as last week, so be sure to check out those videos. Subscribe to the channel and click the bell icon for notifications. Don't forget to sign up with Blueberry Markets, deposit $100 or more to get VIP access and a 30% trade bonus. See the link in the description, or if you're on the website, click on that link that says broker and sign up today. Trade well out there, and I will talk to you again tomorrow.